Brent Wilsey, president of Wilsey Asset Management, joins us this morning with more on this. Brent, good morning.
Good morning. How you doing?
I'm doing great, thank you. Is this a good thing or a bad thing?
Well, it's actually a good and bad thing. I'll put it that way, because actually for the month of June, we had $28 billion come into stocks and ETFs not seen since 2014. And actually since the beginning of the year, 10 million accounts, new brokerage accounts have been opened. So individual investors are starting to get into investing. The thing that I'm concerned about is that they're new and they don't understand it and don't have the experience. So there's going to be some problems, I think, down the road.
Are these people who decided they were just going to set up an E-Trade account or something and do it all on their own?
That's what's happening, and because they've seen things like the cryptocurrencies, they've seen the meme stocks, and or the buddy, oh, they made all this money and so forth. So they have this very small window of experience that they think stocks do nothing but go up. Now we have seen some cooling off in these periods. We've seen that, like for cryptocurrencies, they were above what 60,000 a while ago. For the last 2 months or so, they've been hovering $32,000. Also, too, the meme stocks, they're down 50-60% on AMC, GameStop. So we're starting to get what I call exhaustion of this, and I'm concerned that investors, these new investors, will get disenchanted and say, well, this is not very good, and they leave because they had unrealistic expectations about what was really going to happen with investing. You generally average 8 to 10%, maybe 12% on average per year. You're doing pretty good, and I've been through been doing this for 40 years. I've been through 24 corrections. I'm used to things going up and down, but I'm worried about a lot of these new investors are not used to that, and therefore when things go down, they'll panic and not come back for years.
Are there any particular sectors that they're investing in more than others? Well,
they do seem to be, and this is the good side, they do seem to be looking more at energy, materials, industrials. So they're looking at some good things. The professionals are the ones that are more concerned about a pullback. Unfortunately, individual investors are not. But these are industries that people are kind of looking at, starting to look at. Energy, I think, is great now because we've had more than a 10% pullback in energy stocks, which is a correction. And we know that a correction is a 10% more pullback in the market, but you can have these different industry sector pullbacks or corrections, and that's what we're seeing in energy. And a lot of these energy stocks, they pay great dividends, and when the stock falls, you get a higher yield. But be patient because it may take a little bit of time for that to come back up. But energy, materials, and those are such things as paints and chemicals. Industrials would be your big companies like General Electric and companies that are actually manufacturing things. These are ones I think going forward will do very well.
Why do you think this happened in June? Was there significance to the month?
No, I think there's just a lot of money out there in the economy. We do have earnings season starting up, which is a good thing as well, because we get to get a peek at what the companies do over the last quarter going forward. So that could maybe have something to do with it, where people know, okay, we're going to get more information. But I just think there's a lot of money out there. I mean, we're still at these $21, $22 trillion level for liquid money in the economy, and people are saying, gee, I think I'm going to invest because it's doing so well. And that's, again, I got to come back to that. Worries me because their expectations are too high. But if they get good advice and from segments like this, learn that, hey, if you average 10% per year, you're doing pretty well. Don't expect to get 100% every year, because if you get 100% one year, you could lose it all the next year.
Is there anything else about the market you think we should know?
Just be patient with it. I think in the summer, you usually go through these doldrums. More traders go on vacation, people go on vacation. So you may have less activity, weather the storm. I think we're going to see, again, some good earnings coming out. The banks reported last week. They doubled the earnings from last year. They say some good things. They're reclaiming some of the loans they wrote off. They said, no, they're fine now. So they're reporting some good information. We'll see more probably the next couple of weeks of how these other companies are doing. I do expect good earnings reports, but I'll be listening to what they're saying about the future going forward that they're seeing in the economy.
Okay, during the pandemic, your investing seminars were turned virtual. Are you back in person?
We are back in person, yeah. Actually, we have one this Thursday at 6 o'clock in Scripps Ranch, and it's free. If they want to sign up or check it out, go to our website, smartinvesting2000.com. We'd love to see more people there.
All right, Brent Wilsey, president of Wilsey Asset Management. Thanks for the info, Brent.
Thank you.
Have a great weekend.
You too.